All right, guys. Morning again. All right, let's get into the charts. So there's a lot to talk about. I'm going to go through all this again in the live room. And, I got a picture of my video, my testing when I'm testing the audio and the sound. This is hard to grab. There we go. Okay. All right, so I just mentioned that this is an opportunity this morning across global macro to buy all the stuff we like. So growth is slowing. There's no inflation. The world economy has been slowing. Europe to China, most of the countries are slowing. That's nothing new. We know the Fed's finally picked up on that. You're coming into earnings season, which you have ridiculously hard comparisons. They call comps from last year after we accelerated for 8-9 quarters. We had record profits, sales, blah, blah, blah. So it's going to be tough, should be a tough earnings season. We don't necessarily trade all of those fundamentals, but you got to know the backdrop of why we like gold, why we like treasuries. Doesn't mean we're not playing S&Ps on the long side. Doesn't mean we're not doing different things with the dollar. But let's just go through it. So we've liked gold for several months now. This is a good buying opportunity this morning. And like I just said, even if we do break this higher low right here, you see how we made a higher low, guys, at the bands? That's what we call the TMS in our model. If you break that, the model says you go back to the 200 and or full pi cycle. I think that would be pretty tough to get all the way back to 330. But that said, we're gonna be buying more into that area, into the zone. I don't even think we're gonna get that deep, but anything's possible. So 4-hour cycle's low. So from a trend perspective, bullish, we like it. 4-hour cycle is right there. Now the daily can come down a little bit more. So we cycled off the top when we were selling into 1430, and then we talked about being patient because you got to sit through that daily cycle. Right, and then we had a couple buying opportunities. Had another secondary run up to 1440. The cycle turned back up, and now we're actually taking another cycle back down. So that's what I mean. If we take out this low, then this daily cycle is probably going to throw you into the middle of July before we make another low. So how are we going to play that? We're still going to play. So if you break, so here's what you can do. You can buy futures. Or if you guys are expressing that in GLD, and you can buy protective puts below the market. Like I bought puts at 1380 Thursday or Friday because I know that I'm going to be buying more futures. So those are protective puts in case we get the deeper pullback. So what that allows me to do, one, it gives me the right to sell at 1380, but essentially those puts are going to become profitable, in the money, and I'll make money on my puts, and then I'll use those profits and buy more futures and get longer down here. So, and then that you buy the puts because also if futures rally, my puts are going to be, the delta is going to be going down. I'm going to lose less on the puts as my futures have a full delta margin, etc. They're going to rally a lot harder, still going to make money on the upside. So that's how you play a deeper pullback. That's how you play it when you want to be patient. You can also take the other side of that, buy silver. Short silver. So we've been doing a little bit of that. You can hold your silver short depending on how long you are gold. Like if you're long gold and it kind of feels like it's a little bit painful, then you just keep your short silver on. If you've been patient, you've raised cash and you want to increase your gold position, then this morning maybe you were covering your silver on the lows. I decided to hold mine. Because I'm pretty long. I bought a decent amount more now of gold. So, but this was an opportunity to cover your shorts this morning on silver. 30-minute cycle was low. I talked about that. The signal that you can cover that. 15 has been a pretty good level. All right, so that's a pairs trade. We're short a little bit of silver against our long gold, but we like being long precious metals. Now the euro, let's talk dollar. So dollar, if the Fed's going to continue to pivot, you're going to have some decent moves where the dollar cycles lower. All right, so we had that move where the dollar came off. This is the euro chart, so this is the opposite. The euro rallied, dollar came off 2 weeks ago. Now we cycled back the other way. This daily cycle does an amazing job. I like being short dollars now, and I like being long euros. I haven't been really a bull on the euro for probably 3 years. But this pattern, now that we broke above the bands, you made a higher high above these series of lower highs, that's meaningful. This higher low, meaningful. This higher high, meaningful. You're actually making higher highs and higher lows. This is technically in an uptrend. Doesn't mean we can't go back to 111, but when you get the daily cycle this low, the euros come back in, and that's the same reason to be buying the yen, but buying gold, buying treasuries. You've had this bounce in the dollar, and that's what's. I mean, if this turns around and the euro rallies, the dollar comes off, gold is going to do really well again, assuming that rates bounce here. Now, you talk about treasuries, another one of our favorite places to be, if not our favorite place to be for this entire year, and really since September, October. Again, daily cycle, we talked about we may be due for a pullback. You tried to make a new high, you couldn't close above it on the daily level, and then you get the pullback. We're back here at the 200. This is a great place. We were taking profit into new highs. Now you want to be buying back. So I bought more 10s this morning. I covered short calls that I had against my long. See, we were selling up here. Sold some into 27/8. Now I'm buying back this morning. I covered calls. I bought more calls. Buy futures. Cover your 5-year shorts. We covered a lot of our 5s Friday into this massive move down. This is all me covering my short. So then, again, another example of we're not just outright buy and hold, pick something and get leveraged long and stick your head in the sand and forget about it. You want to trade around your core position. You want to take other side of that trade, the hedge. You want to have pairs trades on in the market. If you were just long treasuries and gold on Friday, you had a really bad day. If you have some 5s that you're short against your 10-year long, and I teach you guys how to structure that so that you're still bullish treasuries, but you're actually in a flattener, you're short the smaller duration part of the curve, you can cover that stuff back on days like today, days like Friday, and that allows you to not have poor performance in the overall book on a day-to-day basis when stuff that you've liked is getting hit pretty hard. So cover your 5s. Okay, we did that Friday. I had another account here that I covered some more 5s on this morning. But I'm essentially out of all of my 5-year short. And then I actually even have ultras on here short that I shorted at the bands. I still have that on against my 10-year long. And I'm probably going to hold that until I see a little bit more strength in both treasuries and gold, and then I'll come out of that. My plan was to see if we got one more push down, and then I was going to cover this one ultra short contract. So the story is we're playing both sides, all right? And then lastly, equities. We talked about 3,000 was a big area. Market struggled to get back above it. And then this morning, though, we're back at intermediate term levels where you can see the market bounce. So I've been playing S&P's long and the Russell short. So I was shorting on strength on the Russell, all up in here, short, cover. I still have a piece that I didn't want to cover, even though this is a great spot into the support from last week. But I do want some more short on in case we break this kind of range trade here, and then we fall back to the 2 and 3 standard deviation channel of the daily and the weekly charts, which will bring you back to like 1530, these lows. All right. But still a good place to book some Russell on the short side, and then you can beef up your longs and S&Ps. And then at the same time, what were we doing on the VIX? We knew that when we got our pullback in S&Ps, we were going to be a buyer. And then last week, when the S&P was high, up here and up here, we were buying the VIX. So here you can see we're back near pi. This is a great spot to be adding to S&P long. All right, and then the VIX, we were nibbling on the VIX down in 13, 14 handle. Here, buying, took some off. You could have rebought here on, I think that was Friday. Even this morning, that's going to open up higher. That's going to open up higher. But, so if you buy the S&P here and the market breaks down further, we have our calls on the VIX that we'll be taking profit on. And you can roll that into more S&P longs, or you can just keep your S&P long small and keep working the Russell short on bounces. But again, we're just playing the model in a pairs trade form against multiple. If you're long S&Ps, buying the VIX in the right spots when the model talks about it or says or shows you that that's what you need to be doing, the cycle, the trend, the signals. That's how we just kind of, like I teach you guys, pouring water from one glass into the other, and it's back and forth, add and reduce, and we do that across multiple asset classes. And that's how you run a book, and that's how you can trade global macro and limit your risk. And there's a lot more to it, obviously, as far as like what percentages you want to put to what assets in your portfolio. But I think that's the story this morning. I didn't talk about the yen. I'll talk about that in the live room. You guys should sign up. I'll put a link in this video for how to come into our live room for a week trial access. We're trading together every day. I also put a link to our River chat room. That's free to join. So you can check us out, communicate there. All right? You guys have a great trading day. I'll see some of you in a few.